the bell. It gives you an idea where it all started. Frontier opening bell for today, the second trading day of the year. It's a Wednesday, the 3rd of January. So just a quick run through the Nigerian stock market. Remain red hot at whopping 1.63% to start the new year, taking the all-share index to a new level in the new year on the first day, 75,000 reading just doorsteps of 76,000. That's a roaring day. The Boa Cement and Airtel Africa, two of the largest capitalized companies on the Nigerian market, moved the trading day, the first day in the new year, to a very positive close. The BRVM fell by 0.64% in West Africa. The Ghana market remained flattish to start the new year. The Egyptian market also came out very strong, 0.28% on Sunday, came back after the New Year Day on Tuesday with 2.44%. The Nairobi stock market was up by 0.15%, while the GSE fell 1.54% because of its correlation with the rest of the developed and emerging markets speaking. So it's a downside day, a very weak start to the new year for the developed and emerging markets. The Frontier Africa sidesteps that. Zimbabwe stock market, the ZSE, also finished positive, more than 1% on Tuesday, which is technically the first day of the new year. Let's take it down and look at the top stories across East African corridor as we get the economic, business, investments, and the markets space started in the new year 2024. Kenya's reporting trade deficit down 12.5% in the third quarter because of export earnings. We're going to keep seeing a number of data from the third and the fourth quarter of last year. So don't be surprised. A new year will give you a whole lot of that as we move on, including earnings, by the way. The EIA fund says it's subscribing to Zambia's green bond, which is one of the biggest on the continent, while Kenya is lobbying Uganda to stick with the Mombasa port as the venue or the loading port for its petrol products. Meantime, Uganda is suing Kenya because fuel import row is escalating between these neighbors. Something's got to be done within the East African community to resolve this face-off between two of the biggest economies on the East Coast. Then the U.S. Has removed Uganda, Central African Republic, Gabon, and Niger Republic from the AGOA list. AGOA is a 25-year African Growth and Opportunities Act that the U.S. floated some 25 years ago, will be coming to a close in 2025. Ahead of that, the U.S. is removing these four African countries from that list, while some African countries are asking for an extension, including economies such as the United States and Kenya. Let's get on to West Africa. President Tinubu signed a new year budget. We've had a new 100 billion naira consumer credit fund, a new initiative in the new year budget. In the meantime, there's a whole lot to digest within the Nigerian space. If you're looking at the state of the economy in the new year 2024, 28.8 trillion naira is the size of the new budget that the government is pursuing. The government is, however, positive that there will be more revenue from the MDAs in the new year. In the meantime, good news from the month of December. Nigeria's Purchasing Managers Index, which measures manufacturing and industrial activity, moved from 48.0, a contraction level in November, to a more expansive level, 52.7 in December. That was on the back of that industrial manufacturing FDI inflows of roughly $300 million that was posted at the end of September. Of course, we'll talk about the budget, but the National Assembly has also given President Tinubu's the green light to securitize about 7.3 billion naira ways and means into NTB bonds that will be tradable. That's a carryover from the Buhari's administration, by the way. And of course, the Ghana Government Revenue Agency, the GRA, is looking into the accounts of foreigners in Ghana to see about that 1.6 billion cedis unpaid taxes. The revenue man is on the streets. It's on the hunt for those who are defaulting. And Bloomfield has awarded a AAA rating to Ivorian Social Insurance Institution. Congratulations on that. Stepping into 2024. Let's take it up down to Southern Africa. and follow through some of the headlines you need to follow as you get into today's trading day. The markets there in Southern Africa are moving very strongly, but the GSE is going through some rough patch so far in 2023. Capital raising in a permanent pause because delisting wave continues. 22 companies actually delisted over the past year from Africa's most advanced and the biggest economic market on the continent. In the meantime, Zambia's policy and monetary and research centers looking at about 4%, not of 4% GDP growth for the new year, while Zimbabwe's agriculture and mining is projected to anchor the Southern African country's 2024 growth. President Emerson Mnangagwa is projecting something around 7%. We've seen a few projections, including that of President Alassane Ouattara of Cote d'Ivoire, looking at Cote d'Ivoire's GDP in a very strong positive reading for the current year. Nigeria is projecting about 3.8%, by the way. Reserve Bank of Malawi is starting the payment system for trade facilitation for the Southern African economy, while Angola has started implementation of its 24.7 trillion Kwanzaa budget for the current year. Hit the ground running, everyone. So let's finish off in North Africa. As always, Egypt's current account flips to $2.81 billion deficit in third quarter of 2023. Egypt, however, is getting $182 million from the European Investment Bank and EIB for green projects within the North Africa's economy. And Morocco's reporting trade deficit narrowing to 7.5% of GDP in the third quarter of last year because of energy price rebounding. And Malaysia's Lion Group is planning about $6 billion investment in Algeria. That's some good news. That's some big money on the table, big chunk of money that the administration of President Said in Algeria could use. Pardon. That's Algeria. President Said is of Tunisia. Algeria has a different president. So apologies there. But that's your opening bell for today. Keep it here on Frontier Africa Reports. I'll see you soon, everyone. Thank you very much for watching.